Hello everyone, this is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing with episode number 117 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988 and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. We've got a big podcast for you today because this episode will be looking at the impact of tariffs on the electrical market and specifically what we've seen and the impact of tariffs on electrical stocks. We'll also be taking a look at some super housing markets for 2025 by analyzing the most recent building permit data released from the Census Bureau. And as usual, we'll be looking at several key weekly economic indicators to track: initial unemployment claims at the state level, freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to the folks at Champion Fiberglass for sponsoring this podcast for more than 100 episodes over the past 5 years. For the week ending March 29th, the advanced figure for seasonally adjusted initial unemployment claims was 219,000. That's a decrease of 6,000 from the previous week's revised level. The 4-week moving average for these claims was 223,000, and that is a decrease of 1,250 from the previous week's revised level. The unemployment rate in April did ratchet up 0.1% from March to 4.2%. In midst of all the furor over tariffs, on Friday, April the 4th, the March employment data for non-farm payroll employment came in much higher than expected to 228,000 new jobs. A FactSet report said that economists were expecting the new job data to slow down to 130,000. So that's a good chunk there. It's almost 100,000 missed as far as the estimates were, but it is good news that despite all the talk about tariffs, the underlying economy as far as new jobs coming online was really solid. We didn't see any really large decreases in unemployment claims at the state level, and in fact, the two largest were Texas, going down 799 claims, now sitting at 16,670, and Massachusetts now sitting at 4,210. It's down 669. There were a couple states that were up over 500. Arizona at 579 fewer unemployment claims. New Jersey was down 534 claims. 3 states came in with claims of more than 1,000 for the week ending March the 29th. Kentucky was up 2,913. Its unemployment claims now sit at 5,261. Illinois was up 1,321. Its claims now sit at 10,275. And Iowa was up 1,021. Its claims net now sit at 3,133. As you can imagine, these weekly unemployment claims will be a good economic indicator to check over the next couple of weeks as we look to see where tariffs are going to impact are having on local markets. One of the more interesting leading economics for the overall U.S. economy is freight rail traffic, because it's a matter of the amount of raw materials finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR, which publishes this data weekly at www.aar.org. The latest data show that total U.S. weekly rail traffic was 513,553 carloads and intermodal units. That's up 8.6% compared with the same week last year. Total combined U.S. rail traffic for the first 13 weeks of 2025 was 6,316,264 carloads and intermodal units. That's an increase of 4.5% compared to this time last year. Freight rail traffic will be a particularly important indicator to watch in the coming weeks and months because so much freight rail is tied directly to imports and exports. So far, the tariffs have not had an effect on AR's freight traffic, and I say so far because if these tariffs really do set in, we could see some dramatic decreases in the amount of freight activity. The numbers look pretty good at freight rail traffic when you look at individual categories too in the most recent data. Total intermodal units were up the most with an 8.3% increase. This is a big number to watch because it's those big shipping containers that you see on trucks that are shipped by rail also being shipped by ship. So you can see that that's going to be a big indicator going forward with the amount of stuff that's coming in from overseas or being brought out to ports. Other product categories with increases include farm products, excluding grain and food. That was up 3%. Grain was up 2.5%. Chemicals were up 2%. Metallic ores and metals had the biggest decrease at 5.8% minus. And non-metallic minerals were down 1.2%. Motor vehicles and parts also down 1.1%. If you track the oil market, you're probably familiar with the Baker Hughes rig count. It tracks the oil and gas rigs that are operating. This data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits in the United States. It gives you a good sense of just how many of these large oil plays are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. The Baker Hughes rig count was down 2 rigs to 590 oil and gas rigs. That's a 30-rig drop from last year, which computes to a 4.8% year-over-year drop. The only state showing a weekly change in the data was Texas, which is down 3 rigs. It corresponds directly to the 3-rig drop in the Permian Basin. The Permian Basin, the nation's largest, is down 23 rigs compared to this time last year, and that is a 7.3% drop. If oil prices continue to decline, as they have since tariffs were announced, we could potentially see declines in the rig counts. Oil prices are riding significantly below the $70 mark that they have been cruising along for a good chunk of this year. On April the 4th, they were at $61.90 per barrel. Several days later, on Monday, April the 7th, they went below $60 per barrel, which is the first time they broke the $60 barrel since the first quarter of 2021, and that was during the middle of COVID. An oil analyst on CNBC recently said that the break-even point for drilling in the Texas Permian Basin is about $55 a barrel. According to a Dallas Fed survey conducted in March, for shale oil, large operators require an average of $58 per barrel to profitably drill, while smaller firms may require $67 per barrel to drill. The Federal Reserve Bank of Dallas also has some interesting results of a survey in March of more than 80 oil execs, where it computed the break-even points for new and existing wells in Texas oil fields. It's important data because Texas is by far the leading producer of oil for the United States. It accounts for roughly 47% of all U.S. onshore drilling activity. If you look at the price for existing wells, for the profitability break-even point, this is pretty significantly below what you'll see for the break-even prices for new wells. If you're looking at the chart on the left, Permian Basin, existing wells there, $45. And again, that is the largest single region for basin for oil. If you look at the Eagle Ford, another big Texas drilling area, they're a little bit lower. They can break even at $26 for existing wells. Shifting over to the chart on the right, when you're drilling for a new area, and the question was in the top 2 areas in which your firm is active, what WTI oil price does your firm need to profitably drill a new well? In the Permian, $70 a barrel. So we're fairly below what the respondents were saying that they could profitably drill. Eagle Ford was at $62. The Permian, looking in the Midland area, which is Permian does actually expand across into New Mexico, but in the Midland area, Midland, Texas, $61 a barrel is their break-even point for a new well. Economists like to call copper pricing Dr. Copper because it's usually a leading economic indicator for future activity, since copper is used in so many industries, with the construction industry among the leading markets because of its use in wiring cable and copper plumbing pipe. After spending 12 days above $5 per pound in mid and late March, and after the tariffs announcement, the current price of copper on April the 4th dropped to $4.40 per pound. John Gross, the publisher of the Copper Journal, pointed out in a recent post that after copper hit a COMEX record of $5.22 per pound in mid-March, it has fallen 84 cents per pound, or 19%. It's very tough to guess where copper is going on from here. China is a huge consumer of the metal, and it stockpiles it like crazy without releasing reliable data of the size of these stockpiles. My best guess is that future increases in copper price may be influenced about how much the global tariff crisis are affecting the general economies of some of the major exporting companies, including Chile and Peru. Very tough to figure out with China, because if the tariffs do set in at some pretty astronomical levels they're talking about now, this could have an effect on it as well. So tune in for more on copper pricing. Very tough one to figure out right now. While relatively few economic indicators are showing a direct impact of tariffs just yet, Wall Street reacted immediately. It sank to some of the lowest levels for share prices that we have seen since the COVID crisis. Stock prices can turn on a dime, and for the purpose of this podcast, I elected to look at the stock prices from the day after tariffs were announced. Many stocks are well below levels that we saw at this time. And for example, on Monday, April 7th, Atcor, Littelfuse, nVent, and Freeport-McMoRan had all seen their 200-day moving averages drop more than 30%. As a point of reference, on Monday, April the 7th, the S&P moving average for the 200-day moving average was down almost between 13 and 14%, while the Nasdaq's moving average over the past 200 days was 17% down, and Dow was down about 12%. The CBOE Volatility Index, or VIX as it's called, measures uncertainty and volatility in the market, and it has more than doubled just since Trump's tariff announcement. Let's first take a look at the year-to-date drops in stock prices through April the 3rd. That is one day after their tariffs announced. The numbers that we have here roughly correspond also to the first quarter of 2025. So it'll line up with our other reporting we do on our quarterly stock reports. But when you do take a look what has happened, and again, this is just through the April the 3rd, they have dropped since then, but through April the 3rd, the day after the announcement of the tariffs, stock prices for Adcorp down 32.9% year to date. Nvent down 28.8% year to date. Littelfuse down 28.2% year to date. Generac down 24.4% year to date. Hubbell down 23.6% year to date. Emcor down 21.4%. Wesco down 20.7%. Eaton down 20.5%. And most of the names that I mentioned here, if you've been tracking the stock market at all, these are all companies that over the past 5 years or so, for the most part, have really been some of the blue chip electrical stocks. So I fully expect them that they will recover, sometime, hopefully in the very near future. But these are not stocks that were having any trouble in the stock market over the past couple of years. They all have their ups and downs, but at this point right now, and this is on April the 7th, they have been hit particularly hard. And again, the year-to-date stock changes as a point of reference. S&P down 7.2%, Nasdaq down 13.3%, Dow Jones down 3.8%. Again, down. This is through a day after the tariffs announcement. They have dropped since then. Let's take a look now at the one-day change in stocks. This is this is taken the day after the tariffs were announced. Now, when you look at these prices that we're going to be talking about here, normally in the stock market in the S&P 500, a one-day swing is fairly significant, and it's either a nice bump or a big decline. Nothing much more than that. But on the day after tariffs were announced, the S&P was down 7.2%, and several big names were down much more than that. Looking at one-day changes, again, Littelfuse hit hard, 14% down. Nvent down 11.6% in one day. Wesco also down 11.6% first day, at close of business first day. Belden down 10.3%. And again, some of the one-day declines, S&P was around 3.7%, Nasdaq 4.9%, Dow Jones down 3.1%. And again, as we mentioned before, I don't look at these price declines as any indicator of the quality of the company or of the stock necessarily, but most of these stocks here that saw some big declines over the past couple of years have had some really nice runs. So let's hope that continues soon. Before the turmoil and tariffs, that I've been working on some fresh data for building permits to discuss in this podcast, but the importance of tariffs and future impact and current impact on stock prices of the tariffs, I wanted to cover that in great detail, best detail as I could today. But let's take a look at building permits, because I think it's a good summary of some of the most active markets for building permits and where they should point to some good residential construction markets for 2025. The data we'll be looking at is the annual number of building permits pulled through the year-end average for 2024. In some ways, maybe not a huge number of surprises. There were some huge amounts of building permits pulled in the map that we're showing here. Dallas and Houston in particular were way above everybody else, but there's also some good markets there. And in electrical marketing, you can download all the information for all markets to kind of give you a good sense. But let's take a look at some of the faster growing markets here. Alrighty, yeah, let's take a look. Again, these are the figures for the full year of 2024. In this slide, I'll be talking about the top 10 markets for single-family building permits. Look at how much more Houston pulls as far as building permits compared to any other market. Houston, in this metropolitan statistical area, is called the Houston, Woodlands, and Sugar Land, Texas area. 52,851 building permits. I mean, that is just crazy numbers. I mean, you look at some of these other markets just in the top 10 here, and all really big building markets, but Houston just absolutely dwarfs them. Number 2, also in Texas, the trend we've been seeing for years. Also, Texas in Dallas Metro, 47,000 building permits pulled. Phoenix, again, one of the big markets, 30,166 for the year. Atlanta, been historically a really big market for building permits. I haven't seen it as far up as on the top 10 list as it is for 2024. So that's good news for builders in the Atlanta metro. Charlotte also obviously very big over the years. 18,951 building permits pulled. Austin, another one of those big Texas markets. So it's simmered down a little bit, I think, over the past year, but boy, those numbers still do come in awfully strong, as they do for Orlando. The Orlando metro, for decades, it's been a big market for single-family building permits, and it's showing its strength here once again. Nashville, we've seen all the reports on and how much the Nashville area is growing. It shows right up here, single-family building permits. It's in the top 10 market. And if you look at these by population, I mean, Nashville's growing like crazy, but I'm just going to guess here, the population-wise, maybe not quite as big as some of these other markets. So as a percent of population, building permits, it ranked pretty high. Same deal with Raleigh, fast-growing market for sure. Population-wise, maybe a little bit lower than some of these other. Population growth, definitely really, really big. I mean, Raleigh's been attracting people, huge amounts of people over the past 5 years, decade, any period you want to look at. Also on our top 10, Tampa, St. Pete, Clearwater, very big on single-family building, Southwest Florida. I mean, it's just been one of the growth areas for quite some time, and that goes all the way from Tampa all the way down the coast through Sarasota and down there through Fort Myers and all the the beaches down in that area, Naples, and right down to Marco Island. So give you a little sense on the top 10 for single-family permits, and we'll take a look now at the multifamily permit top 10. Alrighty, now let's take a look at the top 10 markets and multifamily building permits. That is, again, that's 5 units or more total year for 2024. Probably not too much of a surprise that New York Metro came in number one, over 42,230 units permits being planned to be built. Dallas, again, we saw them on the single family, up to 22,912 permits pulled. Austin was right up there, 15,008. Atlanta, 13,937. Phoenix, again, another market that we saw in our single family, up 13,577. Los Angeles market, although it's down 5 units or more, down a fair amount, over 3,500, still checked in at number 6 with 13,265. Houston's another one, still on the list, 11,520, but a fairly big decline with over 5,038 building permits down. Miami also in the listing with 10,000, but down quite a bit from last year, down 5,328. Down from the 2023 data. Seattle is on the list at 9,880, and Washington Metro 9,680, also seeing a fairly significant change from the year before. That was a 223 data, but 2024, Washington at 9,680. Well, that wraps up our podcast for today. Again, our thanks to Champion Fiberglass for being our sponsor over the past 5 years and over 100 podcasts of this series. Wow, I think we really covered a lot in this podcast today. I know it ran a little bit longer than normal. I hope that's okay. We'll be tracking the impact of tariffs on the electrical market closely in these podcasts in the coming weeks. And in the April 21st podcast, we'll release the results of the Electrical Wholesaling Quarterly Market Condition Survey that we do with a vertical research partner, an equity research firm that focus on the electrical market. We've been doing this survey over the past 5 years, and we get some great verbatim comments from distributors on what things are concerning them most in the market. I'll be very curious to see what they do say on tariffs. Until then, be happy, be healthy. Don't get too freaked out by all that's going on in tariffs. Hopefully things will change to the positive over the next couple of weeks. But take care. We'll talk with you in 2 weeks.